Well, previous to the price drop that we saw in late 2014 into 2015, the M&A market was really focused on companies collecting up very large contiguous acreages with a very significant number of wells to be drilled and assets to be developed quickly. Instead, what we expect the M&A market to be now is more focused on companies looking for bite-sized projects, looking for highly efficient, cost-effective ways that which they can nimbly look at smaller projects and bring them on into the market when they're necessary at a more tepid pace. In the fall, as we saw prices go down on the oil side, we saw a big gap show up between buyers and sellers. Buyers looking for that bargain basement price as prices were down at lows, and then of course the sellers still holding out hope for a quick $100 oil recovery or holding out hope for the value that their asset was just 12 months previous. That drove a big gap that made transactions slow and brought a lot of not successful transactions in the sector. When it's going to turn, we think there's been a few transactions that have started to set the bar on what the value might be, and as we roll into the fall, it's going to be very busy for M&A in the upstream sector. There's a big appetite for M&A transactions in oil and gas right now due to how quiet the sector has been through Q1 and Q2 as buyers and sellers had problems being successful in transactions. It means that there's a lot of capital that's sitting on the sidelines. Private equity, they're very informed buyers. They're also very patient. So they're sitting back looking at the sector right now, waiting for higher quality assets to come on. And when those higher quality assets come on in Q3 and Q4, that's when we expect private equity is going to be very busy